all of that gold coming into the United States is from the Bank of England. They are getting cleaned out. There's gold in the Bank of England for all these different countries. Those countries should all be worried about their gold. Hi, Alan's got an update on gold flows and the progression of this bull market. Alan, how are you doing?
I'm great, Mike. Thanks. How are you?
Real good. So let's get into this. Show us the first frames that you've got here.
Yeah, absolutely. So gold is over $3,000 an ounce. It's decisively through that barrier. And people keep asking me what is going on in the gold market. So I thought I'd put together a few simple charts to show people exactly what's happening. First, we have gold ETF flows. And well, actually, why don't I let you tell the audience what you see in this chart, and then I'll go after you, Mike.
Well, I see something amazing. So the yellow area is North American ETFs. Blue is Europe. Green is Asia. Look at how small Asia was back in 2023 and how much bigger they are getting now. Each one of their candles is huge. So there's gold inflows into their ETFs. But look at North America. So blue is Europe, yellow is North America. The North American candle from last month is bigger than the combined. It's bigger than the world was buying before. And so, one of the things that people need to remember in this gold rush that is happening now, the book, The Great Gold and Silver Rush of the 21st Century, I point this out, and I've pointed out for years and years and years. In the last great bull market for precious metals in the 70s, it was illegal for Chinese to own gold. There was no input from them. And the same thing went for the USSR. There were no markets. Now there's exchanges in all of these places, and gold is traded. And nobody had any, I remember going to Mexico with my father when I was a kid. We all got in the car and we drove through the Tijuana border and we drove down Baja a little bit. And I had never seen true poverty before. That was my first time. I was like 8 or something like that. I was just maybe 6. I just couldn't believe it. I do remember somebody had taken like an empty refrigerator box and slapped tar on it, and that was their house. The rest of the world, they didn't have any extra cash to invest in gold. They were worried about what they were going to eat the next day. And so that was their existence. And so and now there's billionaires in all of these countries. But the thing is that Asia, that bar wouldn't have existed here. It would have just been North America and Europe only. And when you think of the number of people that are now buying gold in China, and you look at the gold price in Chinese yuan, gold is in a big bull market there. The dollar made gains against the yuan while gold was going up measured in dollars. And so the size of that last candle is just immense. The fact that the Asian ETFs are getting on board with these gold inflows, that is, this is net. So there's purchases and sales going on at the same time. But right now, it's mostly purchases, and it's happening on a scale. This only goes back to March of 23, but it's happening on a scale that has not happened since 23. And I doubt that it has happened. If you could take this back another decade or two, I mean, a lot of like the Asian ETFs didn't exist back then. So this is ETF flows only and the net flows. So that's what I see in this chart. This is very exciting and extremely bullish. It shows that there is a sudden rush happening. I mean, look at the size, the yellow part of the last candle. Look at the size of the yellow parts of the other candles. This is twice as big as more than twice as big as any positive candle. This is exciting. Lobo Tigre, great guy, lives here in Puerto Rico. We've been to dinner several times. I'm glad he posted this chart.
Yes, thank you, Lobo, and thank you, Mike. The one thing I'll say about this is that in any given month, you can see candles on the top and bottom of the zero line, which means some of these regions have net inflows and some have net outflows. And so the gold sort of, you could think of it as moving around from hand to hand around the world. But now we're in a situation where every region in the world is having net inflows. So they're all trying to gobble up the gold, and there isn't enough to go around. So this is a huge shift in market dynamics.
Good point.
There's just simply way more demand now from everywhere.
Yeah.
So our next one here, oh, by the way, on the last chart, we were looking at like net inflows of maybe 3 or 4 million ounces. If you look at the height of this bar here, it's about 3 million ounces. So put that in perspective, we're now going to be talking about metric ton.
This makes that last chart microscopic.
Yeah. So these are UK gold exports. So the UK is exporting its gold, and you can see 2 giant sticks here into Switzerland and the US. So Mike, how do you interpret this giant gold flow?
Well, it's interesting. The only reason that Swiss import gold, or the UK is exporting it to Switzerland, is to refine it. This is not gold headed to Switzerland. This is all gold that is headed somewhere else, but it's going to go through a Swiss refinery first. The US has taken about, is that 87 tons rounded?
Yes.
Yeah.
Yes.
87 tons of the UK's gold. So this is the LBMA being cleaned out. They're exporting to us gold bars that, and this sort of goes along with a video that I made. In that video, the commodities exchange had just ended contracts for 1 kilo bars in London. And so what they're doing is they're getting rid of, there were 4 different trading vehicles that they've stopped using. They're not going to have these. The only thing that you can do now is settle open contracts. And once they're all settled, that type of contract is gone. And what they've had a squeeze on kilo bars especially. And so what's happening here is all of that Swiss gold, it's being exported from UK to Switzerland, and then it gets refined and it's going to go into the US. So some of England's gold went directly to US, but those are only eligible products that can go on the COMEX. Anything that is a 1 ounce bar, a 10 ounce bar, a bar from a refinery that is not recognized by the COMEX, all of the different odds and ends, that goes to Switzerland. So that's that tallest bar, is all of the bars that do not fit the COMEX registered gold category. So let's move on to his next chart.
Yeah, this is Swiss gold exports. So once Switzerland has all that gold, where do they send it? Well, the United States. Look at this.
Yes, and you can see here that that's a lot more than about what, half of that, or it's about half. So about half is that last bar that was sent to us, the 87 million ounces. That's, a little less than half. And then the rest is made up from the gold that the UK sent to Switzerland. So that all of that gold coming into the United States is from the Bank of England. They are getting cleaned out. And I can't remember who it was that said it, but basically there's gold in the Bank of England for all these different countries sitting in the central bank gold. Those countries should all be worried about their gold.
Don't call it a bank run, or do.
Right. It is an international bank run that's happening right now.
It is.
On the central banks. Okay.
Yeah.
What's next?
Well, I just wanted to show an updated price here. This is Yahoo Finance. So this is April gold, so it's looking a month out. But we're over 30.50 an ounce. I mean, this is substantial. So we're moving quickly. So if
I had said gold was going to $3,000, and I said it was going to $6,000 an ounce in my first book, roughly, there were 3 different ways of analyzing gold that all landed right around the same price. And they were all right around $6,000. And when you say, it's like somebody in 1971 at the end of the Bretton Woods Agreement, if they had predicted that gold could go to $100, they would have been tied up, hauled away, and put in a rubber room. People just did not believe it. And so it exceeds everybody's expectations during those times when the public comes rushing in. And right now, we've got the whole world starting to wake up and realize that these fiat currency systems, this is just idiotic and immoral. The inflation that they cause is just flat out theft. It's robbing the masses to be able to give that purchasing power to just a few people. And so I do believe that we are coming, who knows how long it'll take. Maybe it's going to be at the advent of AI, of super intelligence, that we are put on a new way of transmitting purchasing power, of making exchanges, and a new monetary system. But I do know that out of all the different monetary systems devised, gold was the least stupid.
Yeah, can't argue with that. Yeah. So this 3,000, we're seeing the fiat system fall apart little by little, day by day. So.
Yeah, the dollar being, instead of being worth 1/35th of an ounce, 1/3055th of an ounce.
Yeah, and less every day.
Yeah.
And James Turk reminds us, don't focus on gold's 3,000 handle. Look instead at uptrend length. The previous uptrend was 113 weeks. So far, our current uptrend is only 57 weeks. So yeah, we're just looking at the erosion of the purchasing power. So what he's talking about is this green line here. You can see how long this uptrend was. It was 113 bars. The current one we're in only 57 bars. So he's implying that there's a long way to go if the current uptrend mirrors the previous one.
Yeah, that means it's not over with yet. And I still believe that this is just one of the phases. It'll go up. There will be another plateau somewhere where they sort of get a handle on things. And then there will be more bad news, and it'll continue going up. And I think $5,000 now is a ridiculously low price for gold still. James Turk is sort of a friend, and he's a really nice guy. I interviewed him for Hidden Secrets of Money. I used to call him once in a while at his house. He is one of the people that is sort of responsible for getting me into this. I used to attend the Cambridge House Gold Conference up in Vancouver, Canada, and he was a speaker. And he and David Morgan were presenting charts, and they were presenting monetary history as well. And I was just fascinated by it. And I decided back then, when I was watching James Turk and Dave Morgan, that I wanted to get into this industry and make this my life. And I wanted to be on stage speaking to people, but I did not want to speak to a group of gold bugs, which, a Cambridge House Gold Show back in 2003 or something like that, that would have been just all strictly gold bugs. I wanted to speak to a new audience, and I made an alliance with Robert Kiyosaki and wrote Rich Dad's Guide to Investing in Gold and Silver. And I spoke to real estate investors, and the audiences, I spoke to quite a few audiences that were 10,000, a couple that were 15, and one that was 30,000 people in the audience. So I made an alliance with the real estate guru of all real estate gurus at the very height of the real estate bubble. And that's what launched GoldSilver.com.
I love it. Well, I'm glad you did, and I'm glad you met James. So thank you, James. Thank you, Mike.
And thank you, James. Great stuff. Great reminder to all of us that it ain't over till it's over. I want to thank everybody for watching. Thank you, Alan.
Thank you, Mike.